Well, thank you so much for inviting me on here. I always really enjoy doing these things. And thank you very much indeed to the previous speaker, Melissa. That was a very edifying webinar. Today, for those of you who don't know me, I'm going to be presenting about, discussing some trade opportunities which we are currently in addition to what is looking good on the horizon for the days and weeks and months ahead. But first and foremost, for those of you who don't know me, my name's Rob Colville. I founded the online trading brand, analyse.com, all the way back in 2012. I've been trading for about 10 years now, or 11 years, dare I say. And I am a swing trader, trading only on the daily and the weekly time frame, purely because this gives me a lot of free time to do the kind of things that I really want to do. As much as I like what trading can get me and my clients, certainly I don't really have an intellectual fascination with looking at bars on charts all day, as I'm sure many people here watching this morning might also agree. So it frees up time, this style of trading, to enable me to basically pursue my real passions, which involves traveling. I do a bit of mentoring for the Prince's Trust in England, which basically teaches disadvantaged people how to basically grow their business from scratch. So the Lazy Trader brand was born basically to teach busy professionals, people who want the benefits from the market but don't necessarily want to spend all day in front of the screens, because you can quite frankly do very well from financial markets trading the daily and the weekly time frame. Okay, so for those of you who don't know us, we've been accredited by the CPD Standards Office for our courses. We've also, all of our staff have also been accredited by the Society of Technical Analysts here in London, and we've got a good Forex Peace Army rating, so please rest assured you're in good hands. So here's the disclaimer, nothing untowards. So here are the positions we're currently in addition to what is looking good on our watch list. And you might be thinking, goodness, that is a long watch list. Well, let me show you exactly why it's as long as it is. So let's hop to the charts. I just want to show you the trade we're currently in, which is the US dollar versus Norwegian krona. We traded this one a few weeks ago, actually. We traded this off the back of this reversal at this multi-year high here. So as you can see, a lot of people ask, why on earth do you trade the Scandinavian currencies, the Scandis, they're also known as, like US dollar versus Norwegian krona? The simple answer to that question is purely because it is a currency, and we can trade price action according to the story that it's telling us, and we'll trade the US dollar versus Norwegian krona in exactly the same way as we'll trade, say, the British pound versus the US dollar, or indeed the Australian dollar versus the US dollar, or gold or silver or platinum or Amazon. You know, we really do trade from a technical perspective the same way, irrespective of what the asset class is, providing it's on the daily time frame and or the weekly time frame. Okay, the reason why we trade on the daily and the weekly time frame is purely because once we've done our analysis and we can scroll down the charts and the asset classes to see if there are any opportunities, say in the evening or indeed the weekend, then we don't have to do that again until the next day if we're trading the daily, or indeed the next weekend if we're trading the weekly. That's the great thing about it. It's what I call it lifestyle trading, because you can very easily slot it into your existing lives without a show and a dance. Okay, so just looking at this from a logical perspective, we can see here that this level, horizontal level of resistance, also known as a ceiling, hasn't broken since 2016, early 2016. So this propels our view that, hey, we had a false breakout here towards the end of the year, last year, and this was characterized and punctuated by a bearish pin bar reversal, which is a false breakout. So what we did was we placed our entry just below the low here with our stop loss above the high, and we actually are in this position. We managed to get out of the position to enable a free trade, and we're still in this one for the long haul. Okay, it's been an interesting start to the year. The Santa Claus rally did not actually happen this year for the first time in, well, quite some time. And if I show exactly what I mean, looking at the Dow Jones, historically, around about Christmas time, we get the bulls coming into the market. This has happened for the past 15 to 20 years, even longer than I've been trading. But every Christmas, since as far back I can remember, we've seen the bulls coming into the markets quite consistently, and this has presented us with very easy trading opportunities. However, this Christmas just gone, we had instead this bar crashing through this key level of support here and closing below it. We've since seen a recovery, and what we're doing at the moment is we're anticipating a potential reversal. We are interested in two levels. We're interested in this all-time high here, seeing at the Dow. We can see it last tested this level in October last year. Bearish pin bar reversal. We sold this one on the weekly time frame. We made a very good profit, reaching the midpoint of this range here. But guess what? If this comes up to this level again, we'll be looking to sell it again. And what we'll be doing? Well, there's a choice of two options here. What we can do is we can either place a sell order on this horizontal level with a stop loss above a point where price has gone before, i.e. this point here, and just anticipate a reversal and for price to go right back to even the midpoint or indeed at the bottom. That will give us a decent reward to risk trade, even if we're targeting the midpoint. The reward to risk is a 3-to-1. So we're risking, say, £100 or $100 on this trade, then we could be rest assured if it goes in our direction, we make potentially £300 or $300 if it goes to the midpoint. Well, let me tell you something. We actually risk 2% of our trading account per trade because we don't trade very often. That's the great thing about trading on the daily and the weekly time frame. When it rains, it rains. Suffice it to say, if we get an opportunity, they're completely random. Just like winning trades, just like losing trades, you could be waiting quite some time, sitting on your hands, and then they could all arrive at once. A little bit, for those of you who live in urban areas, a bit like buses arriving at the same time, or not at all. Okay, you might be waiting for 20 minutes for that bus, and it might feel like an eternity, and they just don't turn up. But say 3 or 4 turn up at the same time. It's most frustrating, but at least you've got the agony of choice. It's the same principle we can apply to financial markets trading, and certainly the Dow is no exception to the rule here. We've got a number of things on our watch list. So just to recap, we're anticipating if we don't get a reversal around the around this level here, looking at the Fibonacci retracement. So let's just move it back up again. So we're interested in the 0.618, given that we've got this on the daily time frame. We'll just go down and show exactly what I mean. We do have lower highs and lower lows still, so we are waiting for potential reversal at the 0.618. We might not get it, we probably won't actually, but if we don't, we're interested in selling at this horizontal level here. Okay, so if you think about it from a pure kind of supply and demand perspective, the smart money, you think about the bigger boys, the bigger dogs in the financial markets, from a value perspective, the idea of buying into an all-time high is completely nonsense, complete bonkers, and it's far more likely we're going to see profit taking around about this level based on the supply and demand perspective than we will be seeing buying through this level. Remember, interest rates are going up. The Federal Reserve, the Bank of England, they're all in a program of increasing interest rates at the moment. And whenever we get an increase of interest rates, then typically, even though we haven't necessarily seen it for quite some time, stocks do go down because, of course, it costs more to borrow money. And, of course, the credit lines, credit is more expensive, essentially, for these big corporations. So if we don't sell on this horizontal level here, even though we will, but if you wanted a safer entry, I expect that to a lot of you, you might be thinking, hey, it feels like coming in the way of an oncoming train if we're just placing a sell order on this horizontal level in anticipation of a reversal. Well, one other thing you can do is simply wait for a price action based confirmation, and that can be characterized by the formation of a bearish pin bar reversal, which is a visual sign to us that the markets, well, essentially there has been a false breakout above this level, and if we can get an open and close below this level, just like we had back in October last year, then that will do us very well indeed, and we'll just simply trade the break of the low of our stop loss above the high if we get it. Okay, so until then, with the Dow 30, we are just sitting on our hands and exercising a degree of patience and discipline, because it is a valid trading decision not to place a trade if you don't see an opportunity that conforms to your rules. Okay, I've got a question here. Oh, right. Thank you. He came back. Love the accent. Well, that's very kind of you. I don't actually think I have an accent, but we can agree to disagree on that one. You almost seem surprised that I came back, by the way. I love presenting these shows. Don't be silly. Okay, so Let's move on to gold. I mean, I could talk about British equities, but I'm guessing that I have a largely transatlantic audience here. So for the benefit of you good people, I want to keep it relevant to what is probably on your radar. So here we go. Let's talk about the precious yellow, gold. So here we go. Gold has been a bit of a funny one over the past year or so. We actually traded gold last year and did very well off the back of a seasonal rally based on this bullish pin bar reversal mid-December last year. And we took it all the way up to this horizontal level. And we saw throughout last year consolidation and then this bear run from Easter time throughout summer. And we made this kind of reversal here. It represented a higher low in the great scheme of things if we look at the weekly time frame, which is interesting because we are singling out this horizontal level here as a potential sell level. So from us, like with the Dow, for example, we are singling out this horizontal level as a potential level to sell off. Even if it's a momentary sell, then we can at least by this point move our stop loss to break even if we do get it. So let me just kind of recap what happened last year, because seasonality does essentially repeat itself. So from mid-December onwards through January and February, historically precious metals do very well. We did very well. We're in multiple gold long positions and we're long on platinum this time last year throughout the year. And then we let's go down to the daily time frame to show exactly what we did last year, because as technical traders, we basically look for recurring nuances in the market in anticipation of them occurring again. So we bought here at this bullish pin bar reversal, went all the way up. Of course, we scaled out along the way, but this enabled us the opportunity to essentially sell here and buy here. And we essentially took advantage of this intermediate range here, and it eventually broke to the downside. Of course, it didn't break to the upside, and so we had to unwind our long positions pretty quickly. But what I'm simply saying here is we can reasonably expect the same thing to happen again. We've got an enormous horizontal level in the way of price obstructing it. So what we can do is simply place an order on this horizontal level, essentially to capture people unwinding their positions and for there to be at least a retracement on gold. Okay, I'm not saying it's going to be an enormous reversal. We're going to see like people like suddenly unwinding their gold positions. I'm very bullish with precious metals long term. From a fundamental perspective, I think the US dollar, well, it's lost about 95% of its value since the inception of the Federal Reserve. And it's the same for all these fiat currencies around the world. They're basically, well, in the value we perceive them to be. There's no inherent intrinsic value to them. They're made out of kind of like composite metals. And they really do, governments do rely on the fact that we perceive the value of, say, a $10 or $20 note to be the value we perceive it to be. Unlike the Morgan dollars, which we saw like 100 years ago, which had an inherent intrinsic value based on the fact that they were silver, the equivalent dollar at the moment is unfortunately not the same value because it's been devaluing, because we're printing so much money. But anyway, different story for a different day. Looking back at this chart here, what I'm simply saying is, irrespective of my long-term projection for the US dollar and these fiat currencies around the world, I feel that we've got a decent sell opportunity imminently around about here. So how are we going to trade this? Well, the answer is simple. It depends on your risk appetite. If you are like me and you'd like to get into a potential reversal position early, then what you can simply do is place a sell order on or around this horizontal level, but with your stop loss, and I repeat, with your stop loss above a point where prices braked out or spiked before. So I think around about here is a decent spot, around about $1,400 an ounce, whereas your entry is on the level. Please be rest assured that the reward to risk isn't exactly bad if we're risking 1%. So even if we're targeting at this point here, it's a 3-to-1, or indeed if you're risking 2%, it's a 6% potential gain. Okay, so this is an idea for gold, and of course, if gold turns around round about this point here, then silver, being a follower of gold, being one of gold's disciples, you can expect silver to potentially do the same. I would always refer to silver as being gold's kind of mad sister. It would always do exactly the same as gold, except on a much more emphasized scale. So if gold goes up, you can be rest assured that silver does it a lot more, relatively speaking. And if gold goes down, silver will do it in a much more emphasized fashion. Okay, even though silver obviously is worth less per ounce. Okay, so that's gold. I would like to also bring your attention to the fact that seasonality coming towards the end of February draws to a bit of a close. It's no longer historically so bullish throughout February, and February, March, April, we can reasonably see the potential intersection of this level tying in very nicely with a bit of, well, the momentum being lost with the bulls, for example. So we've got the seasonals and the technicals tying in quite nicely here. But we don't, dare I say, we don't at the moment with the Dow. Historically, after Christmas, after the Santa Claus rally, historically equities are bearish throughout January. However, like I mentioned, we didn't get the Santa Claus rally towards the end of last year. We've got it, I guess, late this year, late Christmas present for the people who are buying equities. However, we cannot discount the fact that we're approaching an all-time high and there's a potential opportunity to sell. And where we can predict reversals, that's where, in my experience, the money is made. I find reversal trading far more lucrative. Okay, the hit rate is far less than we were trading with the trends. However, you need to ask yourself, what kind of a trader are you? Are you someone who'd rather go for a lower probability but have a far higher reward, far higher reward? Or are you someone who'd rather go for higher probability but lower reward? It's entirely up to you. In fact, the matter is that with reversals, there are three ways you can enter a reversal. You can either do it the most aggressive way, like I just mentioned to you, and get in on the level, providing you have at least two previous tests, like we do with the Dow. 1, 2. So the third test is where the opportunity is. You cannot just do it based on one previous test. That's just a coincidence. If you have one previous test and you're relying on the second test, kind of like bringing home the bacon for you and setting up for an opportunity, that's just a coincidence. I repeat, coincidence. So and the third test is where the opportunity is, and it's the same really for these other opportunities I'm going to share with you. So let's talk about platinum as well. We've got the pound versus the Swiss franc. We've got Brexit happening as well, which I'm sure many of you are aware of, which is exciting times. Hey, a lot of people are asking me, how am I going to play Brexit? Well, I'm actually not going to trade it per se. However, if I'm in any positions involving the British pound around about Brexit, which is in about 6 weeks, then I'm going to basically move my stop loss. And if we do crash out of the EU, which will be interesting to see if we do, not only will it be something to tell our grandchildren, it could potentially, we could find ourselves in a trade which either goes completely in our direction or not. My philosophy is simple when it comes to news or historical events like Brexit, like any referendum involving the Union of the United Kingdom, or indeed, dare I say, Donald Trump. Any kind of like election or referendum outcome, I do not let really affect the trades I'm in. I can either rationalize it by simply saying, well, hey, it's 50-50, it's going to be an agreement with my trade, or not. If it is an agreement, 50% it is, then it will help to perpetuate a winning trade and move it on further into gain in a far faster amount of time. Or if I'm wrong, then hey, I lose what I've risked, or I just lose any profit that I have on the table. It's as simple as that. This is why trading with positive reward really does kind of help you in these instances. Because say, for example, we crash out of the EU, for example, and no one's really expecting that to really happen. I mean, seriously? But if we do, that's not going to be very good for the pound. However, if it wasn't for the fact or the threat that we could crash out of the EU, then quite frankly, I think the pound is oversold, and it is one of the most undervalued currencies in the world at the moment. So let's take a look at the British pound versus the Swiss franc. We can see here that we have been in this fantastic range for a very, very, very long time. Let me just draw the top side of this range. I apologize. I've just on my different, one of my laptops is in at the moment, being fixed, so I'm on my second. So looking at this one here, this range here, a very, very simple idea, looking at it from a logical perspective, would simply be to buy the bottom of this range here and sell the top of the range. It's an enormous range. We did this a few years ago when we really made a fantastic gain. Let me just show you exactly what I mean. So in December, I know it might seem like a long time ago, December 2015 I'm talking about, December 2015, based on the fact that we had this horizontal level was about 7 years old then, and we figured that, hey, there's going to be much more chance that the price is going to go up and bounce off it than it is going to break through it, based on the fact that the range has been established for 7 years. So what we did was we saw or identified this bearish pin bar reversal, just representing a lower high, rejecting this strong level of resistance that is about 7 years old. So what we did was we placed an order to sell at the break of the low here, stop loss above the high, and we had essentially, we just put our profit shooter on. Very good reward to risk is my answer. So let me just really kind of like give you a visual impression of what it was. So this is what it was at the top of this range. Okay, so we targeted the bottom here of this range, bearing in mind the bottom is all the way down here. The reward to risk profile was fantastic. 45 to 1 reward to risk. If you risk 2% per trade, that's close to, well, that's about a 90% potential gain if we got triggered into the trade and it went all of our way. Obviously, the bigger the difference between our entry price and our take profit target or our ultimate target, the lower the probability is in the market getting to it. Okay, there is a big difference between what the market is likely to do and what we want it to do, and this is why a lot of people kind of fall down when it comes to trading. Okay, they're fanciful kind of like desires versus what is within the realms of possibility. So going back to how we actually traded this one, we placed our orders just below the low of this bearish pin bar reversal, stop loss above the high, and we essentially got triggered in very quickly. And then what we did was we scaled out the position round about this point here. We usually get out of the 1-to-1, but quite frankly, I was busy, and I know it's not a good excuse. So we were in a free trade at this point, moved our stop loss to break even. What could possibly go wrong? I mean, we were in a free trade. We had so much potential profit to make in percentage points all the way down to the bottom, even though, realistically speaking, that even with a reward to risk profile of this nature, we would be far more comfortable trading or targeting the midpoint, given that it'd be far better, I'd far rather 20 to 1 or 22 to 1 and a higher probability of the market getting to a 20 to 1 rather than holding all out for it to go all the way to the bottom and it only reaches just the midpoint. We don't take profit and it goes all the way back up again with no gain. That would absolutely suck, and that would be absolutely criminal for a trader to do that. So we were able to trade a reversal, and we're able to also take advantage of the ensuing trend inside this range. Okay, sorry if there's background noise, by the way. I haven't got a mouse on me at the moment, so that's with the broken the broken laptop. So what we did, we could see that we had the 20 moving average crossing below the 50, the 50 crossing below the 200. So that was a sign to us that we've got an agreement between the short, medium, and long-term traders. So here we go. We've got a pullback in a downward trending market inside a long-term range. Let me just give you that kind of perspective again. So what we did was we placed an order just below the low here, stop loss above the high, and our first target was the previous swing low here. So we scaled out at the previous swing low, there we go, and we just left the remaining portion of the trade, because in the great scheme of things, we were verging on the midpoint. We weren't quite there yet. So we had multiple scale out opportunities, but if we just go forward a little bit more, we had a complex retracement. And this is the most painful part for anyone who is targeting the bottom side without scaling out, seeing this retracement and a 25% potential gain evaporating. However, Brexit did happen in the end, as we all know, and this was characterized by this spike coming down here. I had no idea Brexit was going to happen. There we go. However, I did know one thing. If Brexit did happen, it would help to perpetuate a winning trade even more, and it was a 50-50. It was going to happen, by the way. And if Brexit didn't happen and the Remain camp won, then we would have taken profit off the table. We would have expected the pound versus the Swiss franc to either rally or remain unchanged, given that a lot of people didn't think that Brexit was going to happen, including Barclays Bank, who bet a lot of money actually on Britain remaining in the EU, but we're wrong. So vice is to say, not even, no one's right the whole time when it comes to speculation and news. This is why I'm very philosophical about news, essentially 50-50 being in our favor or not. If it is in our favor, at least we've got good reward to risk to ride with. And if we're wrong, then at least we can manage our risk to be a very small percentage of our trading account's value, which is the main thing. Okay, so here we go. I've got a few questions here. Got Tim Downey. You don't think it's going too well, too many times at that level? Okay, well, if we're talking about the present, let's have a look. If it goes down to this horizontal level again, in answer to your question, all the way down here, then fantastic. That would be a great buying opportunity. However, we could reasonably say that this level here is a decent buy level as well, given that this buy level has essentially lasted for well over, well, about a year now. Yeah, just over a year. So we've had 1, 2, 3, 4, 5 tests. So if it goes down to this horizontal level, that would also represent a very decent buy level. Okay, we can get ranges of inside ranges as well. So this is what I've also got on in my sights. But a few weeks ago, I did anticipate an A, B, C, D pattern, which is a free wave harmonic pattern. And when I did the projection of this A, B, C, D pattern, the 1.618 Fibonacci extension overlapped very nicely with the bottom side of this range. So if we've got an extra clue like we did with that horizontal level, then that is fantastic. 1.618 Fibonacci extension, ABCD, point D completion. And as you can see here, the spikes rejecting this horizontal level back in 2011, back in 2015. We know full well that if, as and when price comes down to this level again, whenever that might be, then we can reasonably expect, based on what's happened before, for the buyers to come shooting back into the market. And make no mistake about it, if we look at pound Swiss, since when has pound Swiss, the British pound, been lower? Well, if we go back to 1974, the British pound really was not doing too well against the Swiss franc. But ultimately, the Swiss franc, at least they've retained their currency, unlike many of the other European countries who've succumbed to the euro. Okay, so Tim Downey again. World needs paper. Yeah, plain and simple, right? Fair enough. Okay, great. So, any more questions? Please don't be shy. I sense the irony, Tim. The world needs more paper. But anyway, so going back to a couple more trade ideas. I know we're kind of running out of time, so we've got 15 minutes left. We've got plenty more ideas to share with you. So one more recent one actually is platinum. Okay, so we're at a multi-year low for platinum, as you can see here. This level. Let's go down to up to the weekly. So we're on the monthly at the moment. So even from a value perspective, if we look here, platinum with this level in mind, 2004, we've got 2009. It's tested. Got more recently 2018, August 2018. So we can be rest assured, obviously bear in mind that nothing is guaranteed, that we can expect some overriding perception of value if, as and when the price of platinum falls to this point here. So this is where I've got a buy order just on this level with a stop loss around about here, anticipating a potential buy of platinum. Okay, we can see that it is, quite frankly, undervalued. It's well, compared to what it was back in 2009. There we go. You can see the distance. If we, for example, let me just a bit of tongue in cheek here. We simply place our order on this horizontal level. Let's just put our profit shooter on. There we go. So even if we have a very conservative stop loss around about here, and we target a conservative target, that's an easy 3-to-1 reward to risk. Okay, remember, the smaller the distance between your entry price and your take profit, the higher the probability is of the market basically hitting your target. Okay, but we don't really take anything less than a 2-to-1 because basically it's not within our interest. We'd far rather get a better profit for that. Okay, if we're risking, say, 2% of our trading account, we'd rather get 4% potential gain, suffice to say. But a bit of tongue in cheek. So if we did enter here, we did get a big reversal based on the fact that we did back in 2008, 2009, went all the way up here. Let's just say even if we came to this point here, it's a 16-to-1 reward to risk trade. So risking 2%, 32% potential gain at long term, very much long term, dare I say. So maybe if for our futures contract with a rollover would certainly be a good idea if we are trading this one long, based on the fact that it's a commodity. So let's move on to the next. We have Aussie CAD. A lot of people kind of ask me, well, why are you trading crosses? Well, the simple reason why I trade crosses is that a lot of them are in ranges, and as you've hopefully seen up to this point, they make very decent trading opportunities. Like a very simple trading opportunity would be to simply sell the top of this range here and to buy the bottom. We did this back in October last year. We simply bought on this level. Okay, our trade took a bit of heat. We had our stop loss. We almost got stopped out, but our stop loss was around about here, and we made, or our clients made as well, 1, 2, 3, 4, 5, 6, 7, 8. We targeted the midpoint. We scaled out at the midpoint, anticipating a potential movement to the upside. We didn't get it. Instead, we got this enormous spike down over or between Christmas and New Year. Of course, who's going to predict that spike down? We didn't lose money, but we sure as heck didn't get our move to the upside like we were anticipating. But hey, you know, looking at this from a bird's eye view like we currently are, we can reasonably expect price to reverse around about this point here. And guess what? We would have our sell orders at the ready. So please bear in mind that even if you don't trade the weekly and the daily time frame, you can apply this logic to the 4-hourly, the hourly. However, if you do decide to do that, then you do need to have a very good appreciation for news announcements and what's going to be released and when. Okay, this is why I don't like trading intraday, because trading end of day and on the weekly time frame, basically you're immune to a lot of these market shaking news announcements. Okay, so even if we trading this one, say if it does go up to this point again and we have our sell order on this horizontal level and our stop loss all the way up here, then we've got a very easy, if you're trading the midpoint, trading into the midpoint, 3.5 to 1, so that's about 7% potential gain, risking 2%. Remember that Warren Buffett, you know, being a fantastic investor, bearing in mind he's unleveraged, he makes on average about 20% a year. If we're making, say, even if we just get a couple of these kind of setups or an equivalent a year, we're making a very respectable gain. Anything over like 10%, 15% for the year is a respectable gain for a trader. Okay, a lot of people get caught up with this idea of getting monthly targets. I find that monthly targets are actually very destructive to your trading, because there is a disproportionate relationship between the time spent in front of the screen, the frequency of opportunities, the distribution of winners and losing opportunities as well. So this is why I always look for a benchmark instead. Okay, a year is good enough, or dare I say a quarter is a good enough benchmark, rather than having a monthly target. I mean, you cannot force the market to give you a return. The market will do what it wants to do based on what where it's going on in the news announcements and the data releases. You cannot force an outcome from the market, and this is what a lot of people struggle with. This is why a lot of people lose money. Okay, so that is pound CAD on the weekly time frame. Let's move on to the next one. We have got okay, we've talked about pound Swiss, Aussie New Zealand. This is a highly correlated currency pair. Let's move down. Here we go again. We've got this really nice range here, and we've got 1, 2 tests on this level. So guess what? If price comes down to this level, we'll be looking to buy at this level, and with our stop loss at a point where we've kind of like got our stop loss shielded below a point where price may have broken out before, or indeed we'll be looking to sell at this horizontal level here. If, as and when price gets to it, then we can put our stop loss at a tactical point. What concerns me is the size of this spike here. Hopefully, if we do get a movement up to this point eventually, we won't get any false breakouts to this magnitude, which was all the way back in August 2015. Okay, I think I remember that month very well. I was in Southeast Asia at that time of year, rather aptly, not spending too much attention to my trades. Okay, so there we have it. All right, so let's have a look to see what else we've got. We've got the Canadian dollar versus the Swiss franc. I want to bring this to your attention as well. Let me just find it on this. There we go. So what we're doing here, we also had a false breakout to the downside. But given that the Canadian dollar versus the Swiss franc has been kind of oscillating and funneling into this triangle, I'll be waiting for potential reversal round about the top side of this. Okay, so I'll be looking to sell round about here if we do get our bearish pin bar reversal intersecting with this trend line resistance. If we do, if we don't, it doesn't matter, but we know what we're going to do if, as and when price gets to it. Okay, it's important to have that in mind. All right, so hopefully by now you're beginning to see that if we trade the higher time frames, just because we're trading fewer opportunities, it doesn't mean they're any less profitable. One trade I want to talk to you about, which we're currently in as well, apart from the Norwegian krona, is the New Zealand dollar versus the US dollar. Okay, we traded the hardest bullish pin bar reversal of our entry above the high here, stop loss below the low, and we were treating this as a higher low acceleration point prior to a movement to the upside, which is what we've got. And you know, the New Zealand dollar and the Australian dollar are pretty correlated with precious metals, so we're seeing the kind of seasonal rally of gold and silver. So no, undoubtedly we're seeing US dollar weakness against the Australian dollar and the New Zealand dollar. So we're looking to ride it all the way up to potentially round about here. We can see that we've potentially got an A, B, C, D pattern. And if we do that B to A projection, we can see that the 1.618 aligns very nicely round about here, just in advance of this horizontal level. And guess what we'll be doing round about this horizontal level? We'll be looking to sell round about here as well. Okay, so you can see that where we've got a horizontal level obstructing price, we've also got the completion of an ABCD pattern. Okay, so there we go. So I'm just looking at the questions. I'm just gonna, there we go. Let's move that back into the browser. I don't really know how to do that, but there we go. All right, so hopefully by now you've got a decent watch list. This should be on your kind of long-term projections. I thought I'd give these to you so that you can keep a cursory glance, so that you can bone up on your knowledge of technical analysis and get familiar with your brokerage platforms between now and then. Okay, so that covers a good cross-section. So we've talked about the trades we're currently in, the New Zealand, or Kiwi dollar, should I say, the US dollar versus Norwegian krona. On our watch list, we've got gold, platinum, the Dow 30, Aussie, New Zealand, pound Swiss, CAD Swiss. We've got the US dollar versus the South African rand, and we've got the British pound versus the Norwegian krona. Let me talk about that. We haven't covered the British pound versus Norwegian krona yet. I told you I like my Scandinavian pairs. They're underrated. I don't know why there's so much kind of attention spent on the majors and the minors. Okay, so you can see here that we're very nicely range bound, so it makes sense to simply sell the top of the range here. We mentioned this in one of our weekly webinars which we present to our online trading community. There's a great sell opportunity around about here, and a number of people are in this short. Conversely, if as and when price comes down to this point here, we'll be looking to buy, or indeed if we get an opportunity to buy around about here, we'll be looking to buy based on a price action based reversal. So there you have it. So that's hopefully going to bolster your watch list. I'm just going to move back to PowerPoint now and just basically open up the floor to more questions. Before I do, I just want to thank you all for coming today and for taking part in this webinar. I had some great questions as well. One thing I like to do in conjunction with Traders Talk Live is to give you a reward for taking time out of your day and in pursuit of growing your trading knowledge. So all I want to do is give you access to our online trading community valued at $1,997, which is dedicated to helping private investors essentially become proficient traders, trading the daily and the weekly charts for no more than 10 minutes a day, giving you opportunities to copy our trades, take part in our forum, which is professionally moderated, and of course, engage yourself with our basic and advanced strategies, our weekly analysis. We don't really hold anything back at all. We'll be getting contributions from other traders who've had far more experience than I have, like Julian and Kay, who've had decades, more than a decade. I've had 10 years experience in the market. They've had more or less 30 each. So everything's modular. We've got quizzes for every module in video format. You can access this on your phone. like I said, we've got some exciting bonuses as well. And we've also got this professionally recognized certificate, which you can undertake where you can just do an exam, get a mark, and your certificate will be issued based on your mark. So hopefully you will be getting distinctions by the time you do our course. Okay, so like I mentioned, valued at $1,997. We don't hold anything back. You get access to everything. So one thing I want to do is give this to you for $1 trial access, and also give you access to our pattern recognition software on our trader hypnosis audio pack, which is something pretty unique in the industry. Okay, so all you need to do to get this deal is simply go to, sorry, forgive me, that link is wrong. It's thelazytrader.com/online trading course. Or you can navigate it off the website. I believe Tanya is going to share that in the box. Sorry, that link is wrong. But all you need to do to get that deal is go to our website, go to the Ultimate Package, buy that, type in the Traders Talk promo code, and it will reduce the cost from $252 to $1. Okay, so just to really reiterate, you get everything, no holds barred. I'm just going to change the link here so you can really see this for yourself, because I feel bad that I've got the wrong link in. It's very, very remiss of me. There we go. There we have it. So sorry about the not very good PowerPoint skills. But this offer is valid until midnight tonight. So if you did like the look of it, by all means, go for it. And like I mentioned, we share all of our trade ideas with you, and webinars, basic and advanced strategies, bonuses, and of course, access to the forum. We're a very buzzy online trading community. We've got Chris Rivaldi moderating the forums, and he's very, very, very serious when it comes to increasing interaction and helping people become the better traders they know they can be. Okay, so please don't forget to use the promo code Traders Talk to get that discount. And if anyone's got any questions, please don't hesitate. Other than that, I would like to thank you all for taking time out of your days. And if you have any more questions, please do drop me an email. rob@thelazytrader.com. Okay, I've got one question here. On an exotic currency, isn't the spread high, and trading on the weekly or daily you require a high stop loss? Yep, the spread is higher on the weekly and on the exotic currency pair, but in the great scheme of things, given that we are going for bigger movements on the daily and the weekly, it's very negligible. I won't worry so much about it. Also, when it comes to trading on the daily and the weekly, we do require a higher stop loss. It shouldn't really impact your reward to risk. Some brokers can give you mini lots, micro lots, and nano lots. If you can't trade size with your broker, i.e. risk less than 1% trading a micro lot account, then go for a nano lot account, which some brokers offer. So which moving average are we using? Well, we're using the 20, 50, and 200s exponential moving average. Okay. And there's some good questions. All right. So any more questions, just drop us a line. Trading floor at thelazytrader.com, or just rob@thelazytrader.com. Okay. Thank you very much for all of your time, and sorry about the technical mess ups with PowerPoint at the end.